Hello everyone and welcome back to the Concept Builder series on IFRS and Ind AS by FinPro Consulting. We had seen in our previous session the concept of other comprehensive income, how to differentiate an item between P&L and other comprehensive income. Today we are going to discuss on how to present statement of profit and loss account. If there are any differences between IFRS and Ind AS, that is carve outs under Ind AS, we are going to discuss them very quickly, and also going to check if there are any GAAP differences, that is any difference between Indian GAAP and IFRS Ind AS. So let's start with presentation in profit and loss account. Presentation of statement of profit and loss account under IFRS has been dealt with by IS 1, and similar standard under Ind AS is Ind AS 1. There are a couple of carve outs and there is one gap difference which we are going to discuss here. Number one, IFRS says, that is IS 1 says, presentation of financial statement, that statement of profit and loss account and other comprehensive income. These are actually two different statements. Entity can choose to present both of these line items or items of these two statements under one single statement. So first items of P&L and subsequently items of other comprehensive income will be presented. So this will be one statement with one heading. Statement of profit or loss account and other comprehensive income. Or entity can prepare two separate statements, one of a P&L and second with different heading for other comprehensive income. So entity has a choice under IFRS whether they will prepare single statement or they will prepare two different statements. The second point here is presentation of expenses by nature or by function. The first is by nature. Any point of time if you see this kind of a presentation where you have revenue from operations, you have other income, and then you have total income, this is by nature. This is presentation of expenditure. So these expenses entity can present by nature or by function. That's what IS 1 says. Choice. Entity has a choice. Majority of multinational companies or internationally, the most common way adopted for presentation of expenditure is not by nature, it is by function. Here, by nature, what does it mean? So if you see this first three expenses are related to stock. So nature of expenditure is raw material, finished stock, etc. Second nature or type of expenditure is employee benefit. Any employee working in the company, he may be working in the production department, he may be working in research and development, he may be working in marketing department, the distribution department, he may be working in treasury department or administration department. All their salary will be clubbed under one single heading, nature of its payment. What is the type of payment or nature of payment? Employee benefit expenditure. Finance costs, any type of finance cost, whether those funds have been utilized for production or those are utilized for administration or something else or research and development, that finance cost will appear as a single heading by its nature of expenditure. Next is depreciation amortization. Wherever that asset, tangible or intangible asset, is getting utilized, it may be production function, it may be administration, it may be research and development, distribution, etc. The assets will have depreciation, amortization on the intangible assets that will be clubbed under one single nature of account expenditure, which is depreciation and amortization. So this is called as a nature of expenditure. All right, and then there is a profit before tax, and then there is exceptional items, etc., and then profit after tax. But this presentation is by nature. Then what is by function? By function is this, which is not allowed under Ind AS. So I was speaking about two differences or carve outs, which is under Ind AS from IFRS. The first of that is this. Ind AS does not allow Indian entities to prepare or present their expenditure by function. You will have to present them by nature always. Entity will always present its expenditure in the statement of profit or loss account by its nature, by function presentation is not allowed, which is allowed under international financial reporting standards worldwide. IFRS allows entities to present it either by function or by nature, and most commonly used is by function and not by nature. It's only in India that we use very commonly the presentation of expenditure by nature. What is the difference? So if you see carefully, all the expenses have been distributed department wise, function wise. So all these expenses are categorized, bifurcated by its functions. So if you see cost of goods sold, these are related to production department's function. So those production department's expenditure will include employee benefit expenditure of production department, depreciation amortization of production department, any other expenditure which is incurred in production department that will be clubbed here. Distribution cost will have expenditure with respect to distribution function. Administrative expenses will have expenses with respect to administration department, R&D, etc. So these expenditure have been bifurcated or classified based on or presented here by department. Each department's expenditure are presented here. So this is the presentation by function or by nature. What is the second carve out? If you see, second carve out is actually the first carve out. Ind AS does not allow you to prepare two separate statements of financials of OCI and P&L. It allows only one single statement. So there is no different heading. The nomenclature of the heading of this statement is statement of profit and loss account. It will include other comprehensive income in the same statement. You will not prepare separate statement of OCI under Ind AS, which IFRS allows you. It's again a policy choice whether you want to prepare a single statement or you would like to prepare two different statements under IFRS. Ind AS is different. Two carve-outs we have spoke about. There is one more requirement which is of course is under IFRS. If entity presents its expenses by way of function, then two expenditure are required to be disclosed by way of nature as a part of notes to accounts. One is depreciation amortization and second is employee benefit expenditure. If the item of income and expenditure is material enough, you will have to present it on the face of the financial statements. If those are not material, club it together. If those are common under one single head, and if that item increases or if it becomes material, you will have to again show that as a part of notes to accounts, giving the bifurcation. No item of income and expenditure to be presented extraordinary item. Now this is a gap difference. In Indian GAAP, there is a requirement of presenting extraordinary items. Under IFRS and Ind AS, these two standards, IAS 1 and Ind AS 1, does not allow entities to present extraordinary item. Now what is extraordinary item? But then in the format earlier, we had seen exceptional items. Here we have seen exceptional items. This is there under Ind AS also and also under IAS, that is IFRS. Extraordinary items are the income and expenditure which has arisen out of extraordinary activity, something which is not ordinary. Loss by fire, loss by natural calamity, loss by theft, etc. These are extraordinary items. Any income, any loss, you are not required to show that under separate specific heading of extraordinary item. Analysts, investors will understand whether it's extraordinary or not. You don't evaluate, you don't analyze it, you do not conclude it for the investor on their behalf. They will do it. You don't give anything under the caption extraordinary item. You don't need to highlight anything. You don't need to bold, underline, nothing in the financial statements. So this, if you provide it under extraordinary item caption, it becomes the biased information. It is termed as a biased information. So in order to be faithful representation, that needs to be unbiased. And that unbiased view will come automatically when you do not on your own give the captions. But exceptional is different. Exceptional is something which is an ordinary course of business but not frequently. Sale of fixed assets, sale of a property, plant and equipment. If the asset's useful life is over, you will sell that and you will replace that asset with a new asset. But selling of PPE is not as such your business. It's not an operating activity per se. That is exceptional. Only when the useful life of that asset is over or the utility of that asset is over, you will sell that and you will buy a new asset in order to continue that business. And that's why it is an exceptional. So investor will check if you have sold any asset, whether you have repurchased that asset or not. That becomes your exceptional item. So items like write down of inventory, another example. Write down of inventory from cost to recoverable value. So inventory's valuation, measurement principle, subsequent measurement principle is cost or net realizable value, whichever is lower. So generally cost is low. I will recover that inventory by way of selling it. So I will obviously sell it at a higher amount than its cost. If I'm going to get or fetch lower amount than its cost, that's an exceptional item. That has to be highlighted. Correct? So that's not a biased information because exceptional items are required to be highlighted. Correct? So investor should understand this is exceptional. But extraordinary, he will analyze on his own. Alright? So two carve-outs, as I said, one is single statement, not two statements for P&L and OCI under Ind AS, and presentation by nature only. Presentation by function is not allowed under Ind AS. If you find this video useful, please do like and share the video. Do subscribe to our FinPro Consulting's YouTube channel. Thank you so much.